reporter. My street critique guest tonight is Mr. Stan Weinstein, editor and publisher of the widely followed professional tape reader Market Letter. To say today's market sell-off was anything less than horrendous would be to say that one day in 1945, temperatures were a little higher than normal in Hiroshima. I asked Stan Weinstein, what does it all mean? And where, in his opinion, will it all end?
Paul, as far as I'm concerned, the only thing you can call this is a crash. And what I've learned long ago, when you're in a crash sequence, you don't try and guess a bottom. And I also think that you have to get across, this didn't come out of the blue. A lot of people say this was a big surprise decline, but the truth is, as you know, in late August, they turned negative technically. As far as I'm concerned, the indicators are weakening, and what we're getting now, first you had a Dow theory sell signal. When the market broke below 2450, went below its 30-week moving average, you turn negative, and this is a negative phase that we're in, and the market is now panicking.
Well, there's no question about that, but, you know, you talk about support areas and all that. Those are all broken. What is this going to do to technical analysis?
Well, if anything, as far as I'm concerned, I think it strengthens the case for technical analysis, because the truth is, it shows, while so many people are saying this market's going to 3,000, 4,000, the technicals were weakening, and it pointed it up, that it was weakening. The second thing that it does is show that you have to have good tactics out there for investing, because if you listen to the indicators and you lightened up, and if you had stop losses on your stocks, you were taken out and you avoided this.
But as defensive as you were, you still liked a few selected blue chips, and they've gotten clobbered in this market.
Absolutely, but as I said, that's where the stop losses came in, because we lost those stocks in a hurry.
So you were protected.
Absolutely.
Now, what signs would you look for this thing to end?
Well, there's a couple of things. First, when you start to see that the market goes down, but fewer individual stocks are making new lows, the converse of what we had in August, that'll be a sign. But the other thing I really want to get across to people, Paul, I think before this ends, you're going to soon have a snapback, a very sharp technical rally, which may not be the real thing, but it could come back 200, 300 points. And what I want to stress is, just like when you stretch a rubber band, it snaps back, we're going to have a snapback rally, but I would not buy for it. I would sell into it for those people that are still too heavily invested.
But if everybody follows your advice, there won't be a snapback rally.
Happily, everybody doesn't follow any one person's advice.
All right, now, what do you blame the major source of the selling, let's say Friday and today on?
Okay, a lot of things. Number one, you have the weak technical condition. Then there's a lot of margin calls going out. So I think that certainly kicks in. The mutual fund redemptions are coming in here. The selling programs, you put it in together, and I think you end up with this kind of a terrible
Now, what
loss.
about these wonderful innovations that we've had over the last few years? Index programs, you know, futures-related things, and portfolio insurance. Wonderful innovations, except they turned right around and stabbed us in the back.
Absolutely. But people, you know, I've said it on your show, and not just now, I said it last year. I'm very negative on those automated sell programs. I think that there's potential for disaster. I said in there, except I underestimated. I said on the show that one day we'll be down 200 points. I was too conservative. Those programs are very scary things.
You think there'll be restrictions put on them?
I do believe, and I said that too. I said it'll never happen, Paul, until we have a bear market, until it exacerbates the downside move, and I think that's what's going to come out of this.
Do you think it's a good idea that the New York Stock Exchange opens as usual tomorrow?
Oh, not only not a good, it's a good idea. I think it's imperative. When I hear people with rumors saying, we're going to try and help the market out by maybe closing it for a day or two, I think it would be the worst thing in the world. This thing has to be allowed to run its course. I think if they scared people by ever closing the exchange, that would be a disaster.
Stan, run its course. We're down nearly 1,000 points here from the you know, the peak. Hasn't it run its course?
Well, probably from a short-term point of view, I wouldn't be surprised in the next day or two if this thing does run its course and we get a very sharp snapback rally. But after that, I think that there's going to be a lot of base building because there's a lot of technical damage done, and we'll see how far it goes before it runs its course. I've learned to never guess the bottom.
All right, but when you see it, what groups will you buy? The blue chips again that were the leaders?
I have to wait and see the action. I don't want to look ahead of the thing.
But can you assure us that we will eventually come out of this?
Oh, come on, like night follows day. There's always another bull market after every bear market and vice versa.
Or in this case, let's hope day follows night.
Absolutely.
Stan Weinstein, the professional tape reader, thanks very much for being with us. That's our Wall Street wrap-up.